The broadcast is now starting. All attendees are in listen-only mode.
Welcome to the webinar. And we'll go over the charts and the signals from today and recently, and I'll show you the best way to use the software regarding intraday trading and futures, which is very popular, and as well as stocks for swing trading. Those are the two most popular ways people like to trade in the U.S. So let's jump in and take a look. Always do the first half of the webinar with a stock chart, and then we'll do the second half on a E-mini futures chart. So up here right now, I've got CNI. The reason I picked this is a 130-minute daily, great for swing trading. And we just had a new buy signal come in yesterday, and it looks like it's already up today, $1.20 something. So this is what we're looking for. Let me zoom in. Well, first let's just go back here. The signal came in for anybody who had the software a month ago. By the way, the in between the black lines is 1 day. So you get 3 price bars per 1 day because it's 130 minutes. That's exactly 1/3 of a trading day, a trading day. This is just for stocks now, not for futures. 130-minute daily is just for stocks. Right there, anybody who had the software, a good month ago, 4 or 5 weeks ago, we had a nice buy signal right there. And that's just what you're looking for. You're looking for the blue bar, which means, well, blue arrow is the daily, and it's up, and it's pointing up, and it's blue. That's the daily buy signal. The little dot underneath, that's the 130-minute, the 2-hour buy signal. The price bar is blue. You got a big dot, which just tells you it's that the daily, the arrow, it's the first time the arrow comes in. So it's just a pile of blue. I mean, obviously, everything is blue. And when everything is blue and there's no red above it, well, that's when we want to buy it for stock trading. Up and away it goes. And as long as the prices don't close underneath those little blue dots, we're going to stay in the trade. So you can see over here very clearly we bought it, or anybody who had Abletrend and trades with the signals. And the hard part is not trading with your emotions, trading with the signals, because your emotions or my emotions or thoughts can't compare to Abletrend's algorithm. That we know. But at the same time, there will be losing trades too. So I want to make that clear. So we're in at 89, and here's the first time it closes under the blue dots. And either way, you got the red bar and the red dot, which of course means a downtrend. Red and blue are completely opposites in Abletrend as far as the trend of whatever symbol you're looking at. So we're going to get out at around 106. Let's call it 105. In at 89, I mean, that's a home run, especially for an option trader, because this is a great chart for option traders. I love this 130-minute daily. Great for swing trading. And then the buy signal come back in again here yesterday. Now, technically speaking, that's a sell signal. I wouldn't take any sell signals right now or go short or buy puts just because, we're in such a strong uptrend since March, but the software did say if you wanted to, you could go short there, and that would have been a losing trade because it turned around. But that's the reason why I'm not going to go for any shorts. I mean, I personally just go for longs in such a tremendous uptrend. And then we had a nice little buy signal, and I'm going to zoom in a little closer right here. There's the first arrow. You got to look for those arrows. That's the most important thing on the chart, is the arrow. We're not taking if you're not in it, we're not taking a trade until the arrow first gives us the okay. We need the higher time frame first. Got the higher time frame? Now we've got a blue bar, we've got a blue dot, we've got a small dot, we've got the 2-hour buy signal, we've got the daily. Everything's in agreement. We bought it yesterday at 106. You're at 108 today. So is it too late to get in? Yeah, it's already made a big move. However, if it moves back down, and this is the case with this stock or anything else you're looking at, if you want to get into the trend after it's already started, perfectly fine on a pullback back to the blue dots. For example, right there, pull back to the blue dot would have been a winner. Pull back 4 times here. Pull back. See, the blue dot is support. It stops it from going lower. That's exactly what, we want to always get in on support. We want to always get in, ideally, if we can get in with support underneath, that's great. Oh, okay. Hi, Tom, and hi, Mike Z. Okay, great. Sound and picture is good. Good, I'm glad. And hi, Deb. So that's how we do it. I mean, we just keep it simple. I mean, that's the whole thing. I mean, sometimes, you know, you tend to, sometimes people tend to make it a little more complicated than it is. It's not. Just keep it simple. That's all it is. But yeah, these are places where you can enter the trades if you missed the beginning and you still want to get in. That's fine. Now, of course, it's more risky to get in there than at the beginning of the trend down here at 89 because, nobody knows how long the trend is going to last. However, you're in a big uptrend as we have been since March. So, those are great places to get in on the pullbacks back to the dots. And that's all it is. It's the same thing with everything. Yeah, I'll type in SPY. All I did was start typing on the keyboard and I click one frame. Not one chart, one frame. Because remember, we have two charts combined into this one. We've got two time frames. We've got the 2 hour and the daily all combined into one. Now, this is what's interesting. The S&P is at short term, of course. This is just for short term swing trading. Look how it hit Ablesys resistance twice today, bounced off it and went down. And we put those dots in there 2 days before that happened. That's some really valuable information to have. That's why it works so well. That's why everybody likes it so much and it's so popular all these years. Just keep it simple and just, we're not going to buy the S&P right now. Now, this is short term. On the long term, on the daily, weekly, of course, we're on, on the weekly charts, of course, we're on buy signals. So if you're a long-term trader, trading your IRAs and, that type of thing, well, yeah, of course, you stay in the trades. And you can enter on pullbacks back down to the blue dots. But for a short-term swing trader, primarily options, no, we're not buying the S&P right now. We're gonna wait right now. SPY. SPY is a very popular option symbol to trade because it's the S&P 500. It's the whole stock market. So at the moment, no, we're not gonna do it because there's resistance above. Now, could break through tomorrow or the next day, fine. Yeah, then we'll consider it. But at the moment, right now, we're not going to buy SPY. That other one I showed you, CNI, now that was a buy yesterday. So now let's jump in. By the way, the normal, I've been showing the scalp chart, the last couple of weeks because this is our new chart and everybody's just, really giving such high praise to it and asking questions about it. So I want to continue to show that. However, the normal 1 minute, 3 minute chart still works great. It's not that, forget everything else and go to this chart. No, this is in addition to Abletrend because Abletrend is going to appeal to many different styles of trading. Your style could be completely different than mine. Just like, I like vanilla, you like chocolate. Neither one of us is wrong. It's just whatever you like. Some people can't stay in the trades very long. They just want to get in and out in minutes and just hit singles. They don't want to hit home runs. No problem. This is what the scalp chart is for. It's just for hitting a bunch of singles all day long. Of course, there's going to be losing trades. We had our first losing day on Friday. So, I purposely bring that up because that's how it was. Yesterday was a really, really good day. Today was okay. Nothing special, but it was okay. But, when you're doing the normal 1 minute, 2 minute, 3 minute chart, which is right here, you've got to be able to stay in trades for a while. And you got to be able to stomach some drawdowns. Like, for example, big winning trade right here, out on the 2 green bar stop. That's a huge winner right there. That's 40 points. That's 800. A lot of people they just find it a little difficult to stay in the trade that long because it did go up 10 points at one point here. And that's a $200 drawdown. So you got to be able to handle drawdowns. And not many people can who day trade. And that's perfectly fine. So that's why I developed a scalp chart, which everybody's really kind of flipping out over and finding it's been super helpful. But, you break even there. There was some chop here. Losing trade there. Losing trade there. Sometimes you got to stomach a couple of losses in a row. And that's how that goes. But you can't pick and choose which trades to take. Because nobody in the world has a crystal ball to the future and know which one is going to work out or not. That's why we take them all. However, no trade zone here, no trade zone here, no trade zone here, and here, and here. We didn't take any of those trades These are all no trade zones. We never, on the normal chart, not the scalp chart. On the normal chart, we don't buy if there's red above, the same way we don't sell if there's blue below. Not on the scalp chart. On the scalp chart, we take every trade that hits the blue or red dot or blue or red arrow. That's the only rule. People sometimes say, oh, there's got to be more rules. There's got to be more. You're not telling me everything. I promise I'm telling you everything. I like what I do. I want to be helpful to everyone. I've been here 16 years because I enjoy it. It's working out great. So I really like helping. But a lot of people say, oh, do you take this trade here? This is a little after the market open. All of these prices, every one of these bars hit the blue arrow. But no, we don't take it because there's red above, right? No, that's the normal chart. On the scalp chart, we take every single time the price hits the blue arrow or the blue dot, we go long, as long as the price closes above that blue dot or blue arrow. If it closes under that blue dot or out, no trade. Like right here. See, came down, hit the blue arrow, closed under it. Oh, no. We broke down below support. No trade. See, what about over here? You hit the red dot here. No. It closed above the red dot. No trade. Those are the only ones we don't take if it closes on the other side of the red dot, the red or blue, dot or arrow. Of course, we don't take those. Common sense. Also, we never buy on a red bar, and we never sell short on a blue bar. Obviously, I mean that's kind of trading 101 with Able Trend. We buy on blue and sell on red, not the reverse. So the point is, these first 5 bars right here, every one of them was a winner. You say, when do I get out of the trade? You get out if the price goes, even just, you know what? Here's something you can do. Put your stop just a couple points under the blue arrow when we're going long, or just a couple points under the blue dots if we were buying. Let me find one. Here's one right here. See this bar here? Let me zoom in closer. Closes just above, hits the blue dot. It turns out it went under it, but who cares? We only care where it closes. We only care where it closes. I'll repeat that a third time. We only care where it closes, as long as it touches the blue dot. It closes right above it. 10 seconds later, 5 points, $100. All these trades here, all winners. They all hit the blue dot, blue arrow, closed above it, didn't close below it, so it's a valid trade. A minute or two later, 5 points. That's it. That's all it is. Just don't make it any harder because it's pretty simple. Okay? Yeah, hits the red bar, red dot, closes above it, no trade. Oh, by the way, the first triple confirmation is when you get a red bar and a red dot and a red arrow. Here, the big dot, that's also a signal. You don't have the arrow, so we're not going to take this one. But if you had the arrow there, that's also one you can get in. Yeah, have the big dot. Oh, no, you don't have the arrow. You don't have, meaning you don't have the 3-minute buy signal. You had a 1-minute buy signal. You don't have the 3-minute. No trade. That's it. Now, losing trade here. Closes right under the red dot. 3-4 minutes later, it went above it. No trade. A losing trade. Same thing here. Lost on that trade. But overwhelmingly, it was just banging out 5 points all day long. Yeah, this one hits the red dot, closes right there. The close is the little line that sticks out to the right. 1 minute later, 5 points, another $100. How about this one? No, it didn't touch the red dot. How about this one? No, that didn't touch the red dot either. How about this one? Losing trade. Hits the blue dot, closes right above it. Just put your stop just a couple points under the blue dots. That's what we're going to do. We're going to put the stop a couple points under the blue dot that you just got in, or under the blue arrow, if there was a trade here. You just put it a couple points under the blue arrow. So this way, there's not a lot of money at risk if it's a losing trade. And I guarantee you there'll be some, obviously. But just all day long, just bang it out. Okay. Here's one right here. Hits the blue dot, closes right above it, wiggles around, but eventually the high of that bar hits you 5 points. Out, winner. This one, again, closes right at the blue dot. A minute later, hits 5 points, another $100. These are red bars, losing trade. Red dot, we're supposed to short it. That's right. It doesn't matter that the blue arrow is facing up. We're not looking to stay in the trade more than a couple of minutes. This is only for scalping, which means you're in the trade just a few minutes tops. Now, if you want to stay in a little longer, you can, if the bar is red and you have the red arrow. That's perfectly fine. You can go for 10 or 20 or 50 points. We had a couple of those today. But you got to stay in if it's still red or when we're short, or if it's still blue when we're long, that's when you can squeeze out more than 5 points. That's how you, but if the bar's is green, just leave it alone. If the bar closes blue, you want to, try for 10 or maybe 20 or more. That's a little risky, but that's okay. Hey, you can, that's okay. You got the okay from AbleTrend if the bar is either blue for a buy signal or red. If it's green, 5 points and we're out. We sit tight, we wait for the next one. Just like 20 or 30 a day, chances. So it's also good for somebody who's just in front of their computer, maybe an hour a day, 2 hours. They're busy, they're working, whatever. Hey, I can only trade a couple hours a day. Great, this is perfect for you. But this is only during stock market hours, 9:30 to 4 o'clock New York time. Only. This is not for overnight trading. This is not for, this is strictly for scalping during the market. And you can use NQ, ES, RTY. Now, obviously, NQ, $100 is 5 points. If you're going to do ES, it's 2 points. If you're going to do RTY, it's 2 points. So, sometimes some things I just, we just hold for obvious things, Well, that's how we do it. Keep it simple. All day long, you could just bang it out. Now, losing trades, there's a loser. I like to point them out, too. I purposely look for the losing trades because I want to be real. Yeah, hits the blue dot, closes right above it. A minute later, winner. Hits the red dot, closes right above it, losing trade. Hits the blue dot right there, 1 minute later, winner. Winner here, winner here. None of these hit the blue dot, so it's no trade. Hits the blue arrow right here. Look at that. Hits the top of the arrow, closes right there. 1 minute later, winner. All day long, just banging out. Here, closes right at the arrow. 1 minute later, another $100. Winner. Hits the red dot, closes under it. This one closes above it. And actually, you could have got the 5 points first, but I'm going to count that as a losing trade. Because once it closes above it, or even if you put your stop just a couple points above the red dots, a couple points above the red arrow, if you're in on an arrow, you're out. Here's an example of where, if you wanted to, you could trend trade. There's the red bar. After blue dots, you got a red dot. First red dot, you have the arrow right there, down it goes. I'm not going to count that. However, you can do that if you count. Again, the bars are still red. You have the option to stay in the trade. That's what you like. Where would you place a stop at 12:26? Again, just put it a couple points underneath the bar, underneath the blue dots. That's fine. A couple points under the blue dots, like I mentioned, or a couple points above the red dot that you're in at. That's fine. You get stopped out, no biggie. We catch the next one. Nobody gets hurt this way. That's what I like about it. Very low risk. Chris says if a second red or blue bar comes up after green bars, is this a continuation trade? Or where the stops go? Now, stops are just going to stay under the blue dots, Chris. This is just for scalping. This is just for in and out within minutes. You're going to be out before you blink your eye, you're going to be out of it. But if the bar still, like if these bars here were still blue, just follow it on the way up until it turns green. I would use the 2 green bars, but again, this is more for scalping. This is not for trend trading. So you know what? If these bars were all blue, and they're not, they're green. But if these bars were all blue, hey, you got blue, stay in it, blue, stay in it, blue, stay in it, blue, green, okay, get out. You pick up 20 points instead of 5. That's $400 instead of 100. It's not bad. Too many green means too much noise? No, green just means neutral. This means neutral, Nilesh. It doesn't change the rules. We get in on every time the price hits the blue arrow or the blue dot, as long as it doesn't close under that, we buy. Anytime the price hits the red bar or the red dot or the red arrow, we sell short. That's it. Put your stop on the other side of the dot, a little above the red dot or a little below the blue dot. If we're getting in on the arrow, which is the 3-minute, by the way, that's the 3-minute signal, and the dots are the 1-minute signal. Put your stop on the other side, and we're done. Have fun from there, because it's been a fun ride. Why are there sometimes no 3-minute arrows? Oh, that just means, Mike, that there's no strong support at that point. There's no 3-minute signal. It means that generally when you see that, it kind of goes sideways. If there's no 3-minute or red or blue arrow, it means there's no strong support, the blue dot, the blue arrows, or no strong resistance, the red arrows. Remember, those dots and arrows are like a roadblock. So it just means that there's no strong signal here. This is a roadblock, blocking it from going lower. Here's a roadblock blocking it from going higher. Here's another one blocking it from going higher. It's red. Here's a roadblock blocking it from going lower. It's blue. Here's another roadblock blocking it from going lower. It's blue. Same thing here. This is called support. Blue is support, red is resistance. So when if there's no dot or arrow there, it means it's probably going to go sideways. There's no strong trend in place or no strong support or resistance in place at that time either way. I hope that helps. If there's no 3-minute, if there's a 3-minute signal, you can scalp. Take the 1-minute dot. That's fine. You don't need the 3-minute. That's what I keep saying. You only need the 1-minute. You only need anytime. The same rule. I'll just repeat it. Anytime the price hits a red dot or a blue dot, as long as it doesn't close under the blue dot, we take it. If there's a big red arrow pointing down here, who cares? But the price is not going to stop until it gets like 50 points higher. We're only looking for 5 points. So yes, we'd still take that trade. The normal 1-minute, 3-minute chart, we would not take the trade. Going back to this one, we would not. But this is not for scalping. This is for trying to hit home runs and doubles and triples. Nothing wrong with that. In fact, it works great. I'm just introducing the new chart because I just got a lot of people asking me for something that they could get in and out quicker and can't stomach, looking at their account go up 400, down 300, up 600, down 200 every minute of the day. It's just they can't handle the drawdowns, even though the prices stayed under the red dots and it was still a short trade. Or the prices were still above the blue dots and they were long, it's still going to be, you're going to still get some pretty wild fluctuations. Not everybody can handle it, and that's fine. If you can, great. Use the 1 minute, the 1, 2, 3 chart, the normal chart. We've been using it for years. It still works terrific. But if you're not that style, it just doesn't fit your mentality or your risk tolerance, you can't handle drawdowns, that's okay too. We got you covered with AbleTrend. AbleTrend works for all different styles. That's why it's so well liked. It just depends on whatever fits your style. We're not trying to fit you into AbleTrend. We're fitting AbleTrend into you. That's the right way to do it. I hope that helps. We keep it simple. The scalp chart, as I've been saying, is just to hit 5 points and run. Hit and run. You're in the trade for a minute or two. The normal chart is you're going to be in the trade for 15 minutes, an hour, half an hour, but you got to stomach some, huge drawdowns up or down. It just depends on whatever you're more comfortable using. Look at both charts and, look at both charts for a day or two, scroll back on the charts, look at the prior signals and see which one fits your style better. That's the beauty of AbleTrend. AbleTrend is going to fit to whatever you like. You don't have to fit to only AbleTrend style. And if you don't fit our style, forget about you. It's not going to work. No, we're going to fit your style. Either a longer term intraday trade, a scalp, meaning you're in and out in a minute or two, or stocks for long term, or stocks for a swing trade, like I showed you the first half of this and every webinar. So I hope that was helpful. Always glad to help in every way. Like what I do. I want to be helpful to everyone. Stay in touch. Let me know how I can help if in any way. software's just working great, and more importantly than anything else, stay safe.